What's up everyone, and welcome to another technical indicator breakdown video. In this video you will learn how to use the relative strength index, or better known as the RSI, and this is one of my personal favorite indicators. I use this indicator almost every single day when I'm trading and investing, and it's extremely simple. I mean, you know, when you look at the indicator and you learn how to use it, I mean, there's no ambiguity in the signals that it's giving you, and that's what I personally look for when I'm looking to learn a technical indicator. Is what is the easiest, simplest technical indicators that are very reliable in nature? And the RSI is one of those because it stood the test of time. It's been around for quite some time. A lot of people use it, and so when the signals do come, a lot of people are jumping into those trades, and so you know that it's reliable, that there's going to be either buyers or sellers in that trade depending on the signal that you get. So let's look at the RSI and the different elements of it. It's a very simple indicator, like I said, so there's really three different zones and one line, and that's called the oscillator. So the first zone is this white zone right here, and this is the, I'm just trying to get the, yeah, this is good. So the white zone is anything above 70 on the RSI. So you can see we have this number right up here, and that's telling us where the oscillator is at any given time. So right here, the oscillator is at 71.84. So that is above the purple zone, and that means it's in this top white zone, which is the overbought territory. And the overbought territory is just telling you that, relatively speaking, there are far more buyers than there are sellers. The middle area right here is the purple zone, and that's just the main zone. There's really not, it's not telling you much in terms of the strength in that zone if you're thinking in terms of overbought or oversold. And then there is the lower zone right here, the white zone, and that is the oversold zone. So if the price dips down below that, that is below 30. So the purple zone is anything in between 30 and 70, and the lower zone is anything below 30. Now, anything below 30 is oversold. Now, oversold means that there are far more sellers than there are buyers, and so it might be potentially a good time to buy. Same thing goes for the overbought territory. When it's overbought, it might be a good time to sell. And so the oscillator itself, the purple line, is just telling you what the relative strength is of the asset at any given time, and it assigns it a score. So you can see that right there. Whenever I move my vertical line, it changes the number that we're seeing based on where we are. So you can see if you look horizontally over there, we're at about 54.76 on the RSI, and you know, that's the horizontal level that we're currently operating at. So those are the basic components of the RSI, but let's examine this price action right here on Bitcoin's weekly time frame to just see how this actually works in action. And so the RSI itself, like I said, it gives you those signals of overbought or oversold. So when we had this significant drawdown in price right here, you can see that the RSI dipped into the oversold territory just for a second. Now that area is telling us, okay, the price went down significantly, but it's really oversold, because if on a high time frame like the weekly time frame, if we get into that oversold territory, you can see in relation to the rest of the price action that we've seen in Bitcoin's history, we've only ever been in, on this exchange at least, we've only ever been in that territory one other time, and that was in 2015. So it doesn't happen often. So that to me is like, okay, that's probably a good time to buy, because that is what we would call a contrarian bet. And that's when you're taking a bet that a lot of other people in the market are not taking, and that's when you can get outsized returns. Because a lot of people, when the price was right here in December of 2018, thought, you know, Bitcoin might die. I mean, people were at this point in time saying Bitcoin might die, but the RSI was telling you this is really oversold, meaning that this might be a good time to buy this asset. And you see that if you did buy it there, we did not make a lower low below that low ever again. Since we printed that weekly oversold condition, we have since just went up significantly from that point. Now, what happened subsequent to that oversold condition? So that's one way I want to point out. That's one way you can use the RSI, is if you get into the oversold territory, you can buy the asset. And if you get into the overbought territory, which is the upper white zone, you can sell the asset. Because a lot of people are buying the asset at this point in time. It might be a good time to sell it because there might not be a lot of room left on the buy side before eventually it has to come down and kind of revert to the mean. So when you use that as a signal for that, though, when you're using the RSI and saying it's overbought, I'm going to buy it, or it's overbought and I'm going to sell it, or it's oversold and I'm going to buy it, I think it would be wise to look for confluence when you're doing that. And that means using the RSI in conjunction with other things like a support level if you're doing it for the oversold condition. So if this was a support level down here from previous price history, then you could say, all right, this is on a support level and it's oversold, I'm going to buy some. And because they're telling you the same things, two different things telling you the same things increases your probability of success. And that's what you're looking for as a trader or investor, is really, how can I increase my probability of success so that I can generate consistent returns for myself over the long term, because I'm taking a lot of bets that have a high probability of success over time. And so the same thing goes for the overbought condition, where if you're in an overbought condition, what you can do is you can say, all right, we're running into a resistance level. So like right here is a perfect example of this. When the price rose up right here, we were overbought, but we were also running into this resistance level right here that was support, but then we broke down below it. So when we come back into this level, this is going to be resistance. And that's what we saw right here with this top of this wick. We were overbought and we were running into high time frame resistance. So that is a short signal. And so if you did short that, that would have yielded a very significant percentage, all the way down to about 50% when we got down to this low from December 2019 right here. So you would have rode this bear trend all the way down. And so that would have been a really nice trade. And that comes because you were looking at the RSI and a support level. So you found a confluent resistance zone and you were like, yeah, this is a good short signal. So I'm going to go short here. And so another way that you can use the RSI, though, is to look for things that are called divergences. Now, divergences are different than just the overbought or oversold conditions in the RSI. They're still very simple, especially when you know how to recognize them. So let's look at the cheat sheet that I pulled up here, showing us the different types of divergences. And so a divergence is just something that is telling you there's two different things, in this case the price and the RSI, and they're telling you two different things, meaning they're diverging in what they're telling you. So if we look at the bullish regular divergence, and first off, there's two different types of divergences. There's regular divergences, and then there's hidden divergences. And inside of those two categories, you can see that there's also bullish and bearish. So a bullish divergence of either a regular or hidden type is going to tell you that this is a good time to buy the asset. This is a buy signal. Conversely, the bearish divergences are going to be giving you sell signals. So these are telling you that the price should go down if you see one of these happen. So let's start off here with the bullish regular divergence, and I'll show you guys an example of each one of these as we go and how you might be able to play these. So if you're looking at the regular bullish divergence, this is when the price is making lower lows, but the RSI is giving you higher lows. So what that's telling you is on the second drawdown in price right here, we have more buyers in this area. We're gaining strength. There's less people selling down here. So that so when you see this divergence with the RSI making a higher low and the price making a lower low, you buy during that time. So let's look at an example of a regular bullish divergence. So if we zoom in right here on price, we can see that the price came down right here and we formed a low right here on the bottom of this black candle right there. Then we came up, we formed a lower high in comparison to this one way up here, and then we formed a lower low in comparison to this one. But the RSI was not telling us the same thing. So we're we're trending down in price, making lower lows, but the RSI, conversely, is trending up. You can see that right here with the RSI making a higher low. So you're seeing that the RSI is trending up, but the price is trending down with a lower low. That is a regular bullish divergence. So when does this trade become valid if you see this? Well, the RSI, you're always looking for the candle to close, because sometimes, you know, the price of the price action can move rapidly and cause the RSI to move with it, because it's an oscillator, so it moves with the price. You need to look for the candle close instead of the, just the regular price action. The RSI, if you're just looking at the regular price action, could dip into oversold territory, but then when the candle closes, the RSI could be back inside of the regular purple zone, meaning that it wasn't actually a valid oversold condition. So you don't want to jump the gun. So when do you make an entry on something like this? Well, your entry comes the moment that you know that you've made an established bullish divergence. And that would mean a lower low is set when the RSI is making a higher low right here. So this black candle is shown to be a low once this white candle occurs, because this candle right here is just an inside bar, meaning the price action for this was just contained with inside of the previous candle's price action. So it's not telling us that this is a low yet, because we can continue to go down here after the inside bar, and then this would not be considered the low. The next candle would be the low. But once the high of this inside bar candle is broken right here, this now makes this a low. And so your entry would be right as soon as the high of this inside bar gets broken, right here on September 10th. You would go long, and you could put your stop loss below the previous low, which is right here from September 8th. And you could ride that baby all the way up to our current price action. You just keep riding it at that point. So that is a regular bullish divergence. You're seeing a lower low in price, but a higher low in the RSI, showing us that we're gaining strength on this way down. And the other thing to look for, like I said, is you want to look for confluence. So when you're seeing these long lower wicks from 1, 2, 3, 4, 5, 6, 7 candles in a row of just this horizontal level holding and a lot of long lower wicks, that is consistent with what the RSI is telling you, and that we're gaining strength. People are buying down here. So that would be your time to buy the asset. Now let's look at the regular bearish divergence. So this one, you're comparing the highs, and this is when the price is making higher highs, but the RSI is telling you that we're making lower highs, meaning that we're losing strength on this rise in price. There are less buyers the second time that we go up versus the first time. So let's look at an example of a regular bearish divergence. So if we zoom in right here on price, we can see that the price clearly made a higher high in price, but if we look at the RSI, we can see that it made a lower high in price. I'm sorry, not in price, in the RSI. So you can see this is significantly lower. Right here we're at 81.8, and right here we're at 90.7. So we're losing strength on this rise in price. So now what that tells us is, once the price starts to come down and this forms a high, making this a valid bearish divergence, you would enter a short here. You would sell your asset, and you would look to target the next support level, which is the top of these two candles. So that trade right there, if you were to short it on, as soon as you broke the low of this white candle right here, showing that this is a high, you could enter right there, and that would take you down about 28%. So that's a really nice trade. So what confluence would you be looking for right here? Because at this point in time, in July 2017, there's no previous price action up here to go off of. So there's no historical resistance or support levels to base your trade off of. So what are you using for confluence here? Well, one of the things you can use is the volume. So what you would be looking for here is an increase in bear volume as we rise in price, and that's what we saw right here. In comparison to the bear price action that we saw down here, the bear volume, the bear volume was less significant than right here. If we look at it on a horizontal basis, these two candles from September 4th and September 11th had much higher bear volume than the candles from back here. So that's confluence. That's telling us that the RSI is saying we're losing strength, and the volume is saying there's more selling. And so that means go short. And so if you did, you'd make 28%. So that's how you can use the RSI on the regular bearish divergence side of things for your advantage. Now let's look at the hidden divergences. And truthfully, I still use cheat sheets like this when I'm looking for hidden bullish or bearish divergences, because I don't always remember the relationships. And so don't feel ashamed if after you watch this video, you don't immediately memorize the regular or hidden bullish and bearish divergences. The important part is knowing the idea behind the RSI and looking for divergences, because if you look for them and you use them in confluence with other things like support and resistance and other technical indicators, you can increase your probability of success on trades and investments and also increase your profit potential. So that's the way that I personally like to use the RSI, and that's one of the ways that you can as well. So let's look at the hidden bullish divergence here. This is when the price is making a higher low, but the RSI is making a lower low. So this is the reason why it's called a hidden bullish divergence, because if you're looking at the RSI, you're thinking, oh, we're losing strength, we're making a lower low. But the price is making a higher low here. So that's saying that we're still bullish. And so let's look at an example of a hidden bullish divergence. And what's nice is we actually have a very recent example of this that we can look at that just occurred. So if we're looking at the price action here on the weekly time frame for Bitcoin, we can see that we had a low right here, and then we had another low right here, a higher low in comparison to this one. But the RSI is not showing that. The RSI is showing we had an RSI of 74.7 on this low, and then on this low, we had an RSI of 67.98. That's lower than this one. So aren't we losing strength here? Well, not actually, because if we think about this, the price is telling us, well, I'm overriding you, RSI. I'm still strong. I'm still bullish. And so this is a buy signal. And so when does this become a buy signal? Well, this becomes a buy signal the moment that we have, once again, we have an inside bar for this week of March 1st. That is inside, the price action is contained inside of the week of the 22nd of February here. So it's not telling us really much, but it's telling us to look for the high of the inside bar to be broken, so we know that this is a low. And so once that gets broken right here at 52,567, you would make your entry once this level right here gets broken. And so as soon as that got broken, you would go long, and since that point, if you went long there, you could have made about 10% already. So that would have been a profitable trade as well. But you would have to look for confluence there as well. And one of the ways you can do that, once again, is with the volume. So the volume here is decreasing bear volume. So that's what your indication is right here. So you see that this bear volume is showing us, and you can see the number right here is telling us this is the number that I'm referring to when I call these out. The 134.316K of sell volume versus 124K. So that is less selling volume on this drawdown in price, meaning that there's less sellers up at these prices. So although the RSI made a lower low, the price made a higher low, so it's still bullish, and so you would go long. Now let's look at the hidden bearish divergence. So the hidden bearish divergence is, I apologize for the video being over the compare highs section of this, but it's just telling us that we're looking at the highs for the bearish divergences. So for the hidden bearish divergence, we are looking at the price making a lower high, but the RSI is making a higher high. So you're thinking, oh, the RSI is making a higher high, so isn't that you're increasing in strength? Well, not actually, because you're looking at the price action, and you're seeing that the price action is saying, well, we're making lower highs. So let's look at an example of a hidden bearish divergence. And I believe this is on the daily time frame. Yes, here we go. So let's zoom in on this and take a look at a hidden bearish divergence and look at how you would make an entry on this. So the price action that we're looking at is this price action right here. Now, if we're looking at this price action, what do we have? We have a low right here, we come up, we come down, we form another low right here, then we form a high on the same candle, and then we push down for a lower low. Then we push up again. Right here, we have a lower high in comparison to this one. But what is the RSI telling us in this scenario? Well, if we put the way we can look at this easily is using our vertical line here. So you see this dotted line that is going down the middle of the chart right here? That's telling us where we stand with the RSI on this exact candle. So right now our RSI on this high, which is this high right here from the 13th of October, we are at 39.89 for the RSI. But then when we form this other high on the 21st of October, now we're at 43.76, and that's higher than we were at right here, which is 39.89. So are we gaining strength here? No, we're actually losing strength because we made a lower high in price. And additionally, we're running into horizontal resistance right here from the previous support level that we had right here that we broke down from. So now this is going to be a resistance level for us. And indeed, that's exactly what we saw right here. People took this trade that was confluent with a hidden bearish divergence here on the RSI with a higher high. You can see that right here. We had our high right here, 39.89, and then a higher high right over here at 43.76. But we made a lower high and we were running into resistance. So if you went short right there, you could make about 12% gain. So that's how you can use the RSI to your advantage. You can look for either oversold conditions that are consistent with support levels and other technical indicators telling you that it's a good time to buy and you can go long. You can also use it for overbought conditions where you are significantly overbought and you're also running into resistance. So, whoa, what just happened there? Let's move this. There we go. Right here is an example of that. You know, we have an overbought condition right here. As soon as the candle closes right here, you would sell and you'd have a profitable trade there. You can also use it with the divergences. So you have your hidden bearish divergences, you have your hidden bullish divergence. And honestly, my recommendation would be use cheat sheets like this. You can just look up Rsi Cheat Sheet on Google and it pulls up. There's tons of them online. So there's no shortage of information and resources for the Rsi Cheat Sheets. And so I would just use these, especially when you're first learning. Look at the RSI and look at price action, examine price action highs and lows, and look at the RSI and just see, is the RSI making the same exact pattern that price is making? And if it's not, you know that there's some sort of divergence there. So if you're looking at price, even on like the weekly time frame, and you're seeing, okay, like the recent price action, you see clearly right here that there's a higher low in comparison to this one. But the RSI is like, well, this is not the same thing. So once you notice that it's not the same thing, you don't have to immediately recognize what that means in terms of which divergence it is. When you first start learning, pull up the cheat sheet, maybe bookmark one on your computer or your phone, and pull it up and see exactly what that's telling you. Is it a hidden bullish divergence? Is it a regular bearish divergence? Is it, and you can go through, there's only 4 of them, so it's very straightforward, and that can help you determine where is a good time to buy and sell, and so you can maximize your profit potential and increase your probability of success as a trader or investor. I hope this video was helpful for you and you learned how to use the RSI to your advantage. If you like this video, give us a like down below, share it with your friends who are traders or investors in the cryptocurrency markets or other financial markets as well, as this indicator can be used across really any financial market. And subscribe for future technical indicator breakdown videos as well as other educational content. And we post regular daily updates on Bitcoin price action, as well as sometimes cryptocurrency market updates where we go over other cryptocurrencies like Ethereum and other altcoins like that, and talk about some potential profitable trade entries as well on there that I am looking at myself. So give us a subscribe, and until next time, onward and upward. I will see you guys later.